Hello, everyone, and welcome to today's webinar, the revised Form 3508 and the new Form 3508EZ. I'm Yonina F. Shineweather, CPA, the Consulting Director of Compliance at Viventium, and together we're going to be taking a look today at how PPP loan forgiveness became flexible. So first, just a little word of background here. Form 3508 is sometimes just known as the PPP Forgiveness Application. And ever since the CARES Act enacted the ability for small businesses to take paycheck protection loans and have them turned into grants through a forgiveness provision of the law, everyone's attention has really been focused on this forgiveness process. And then once the form was released for forgiveness, the 3508, everyone's attention was focused on this form. And in the beginning, there was a lot of confusion, misunderstanding, perhaps abuse of the program. And people got kind of nervous because some companies went ahead and returned their loans. Either they were really not validly entitled to them, or they might have been entitled to them by the letter of the law, but kind of not by the spirit of the law, if you will. In any case, there was quite a bit of hesitation on the part of small businesses to go for these loans, even though they may really have needed them, because there was a lot of misunderstanding. They were afraid of perhaps even legal proceedings, and there was a lot of money still left unclaimed in the program. And the concern of the SBA, who were administrating the program, the Small Business Administration folks, the concern was that businesses that really needed these funds to keep themselves afloat during COVID-19, to pay their payroll and certain other qualified expenses, folks that really needed the money were afraid to go for it and were hesitant about getting it and were concerned that they might not be eligible for forgiveness. And therefore, due to all of these concerns, Congress passed another law called the PPPFA, which is the Paycheck Protection Program Flexibility Act, and that made forgiveness much more flexible, much more attainable, much less complicated, much more streamlined, and really was intended to be an encouragement for businesses that need the loan to reach out to their lenders, to their banks, and get the funds they really need so desperately. And so what we're going to focus on today is the changes to the 3508 after PPPFA, as well as a brand new form that was created by the PPPFA called the 3508EZ. And as we'll see, very, very many, perhaps most small businesses will actually be eligible to use the 3508EZ. So will you be one of them? Let's take a look at the forms. We're going to look first a little dictionary, little index cards here of terms. And as we go through the forms, because we're going to be going through them today very hands-on, we need to be familiar with these terms. And some of them apply to the 3508 only. Some of them apply to both forms, the long form and the easy as well. EIDLs, so any of you who had economic injury disaster loans, that was another type of SBA program that was happening around the time of PPP. It actually predated the PPP. Anybody who had an EIDL due to COVID-19 will have to report any advances that they received on their forgiveness form, whether it's their EZ or their 3508, because that will affect the amount that they're actually eligible for forgiveness of. Forgiveness, by the way, when we say forgiveness, does not have to be total. There is such thing as partial forgiveness. And any amount that is unforgiven for whatever reason remains as a loan on the books at only 1% interest. Let's say only, or at 1% interest. And under the PPPFA, the term of that loan has been extended to 5 years. It was previously 2 years. Now, one of the things that can cause forgiveness reduction is if your FTE count goes down. What's an FTE? FTE, it's a term some of you may be familiar with from back in the original ACA days. ACA kind of made that term popular. Stands for a full-time equivalent, meaning if you have employees who work 40 hours a week, well, they're one FTE. But what if you have employees who work 20 hours a week? So each one is only a half a FTE, right? So if you have 2 employees working 20 hours each, that would come to 1 full-time equivalent. And it's interesting that PPP defines FTEs differently than ACA. ACA speaks about 30 hours a week, but for PPP purposes, we're talking about 40 hours a week. That's an important clarification. Now, as you see on the cards, there are two different kinds of FTEs, vanilla and chocolate. One is called FTE exact, and one is called FTE simplified. And you as the employer can pick whichever one works better for your forgiveness numbers, as long as you're consistent throughout with your choice. So exact means you take the number of weekly hours worked by the employee divided by 40, and the resulting decimal is their FTE. Simplified, as its name suggests, is simpler. Anybody who works 40 hours is 1. Anybody who works less than 40 hours is 0.5, plain and simple. So if you had a lot of if you were trying to get as high an FTE count as possible, and you had a lot of employees who were working, let's say 10 hours a week, you may want to go for the simplified calculation, because then you get to count them as 0.5 instead of, only 10 divided by 4, 40, and 10 divided by 40. So, our reports in Viventium, by the way, show you both calculations. And, for those of you who are clients, you can go ahead and use our PPP forgiveness suite to get these numbers. Those of you who aren't yet clients may want to consider becoming clients. The FTE look back period, well, you have to take a look at your FTE count during the time that you held your loan. It's called the covered period, and compare it to a look back period. You get to pick from one of two look backs. If you're a seasonal employer, you get a third choice. An FTE reduction means that any FTEs that went down during your covered period, whether it's an 8-week period or a 24-week period under the Flexibility Act, if they went down, they're going to reduce your forgiveness accordingly, unless there's a reduction exemption. So there's lots and lots of exceptions why you don't have to count decreases in FTE, such as the employee terminated voluntarily, or you terminated them for cause, or you try to hire them back and they refuse. So there's lots of reasons where you could be exempt from FTE reductions. But whatever your reduction quotient is, meaning the percentage that your FTEs went down, not counting all these exemptions, that's the same percentage that your forgiveness will be reduced by. So just by way of example, if you had, let's say, 50 FTEs during your covered period, and you had 100 FTEs during your look back period, that means your FTEs went down by 50%. They were cut in half. And if you don't meet any of those exemptions, so your forgiveness is also going to be cut in half. That's the bad news, but there's actually good news. And the good news is that under the PPPFA, most people don't have to count at all their FTEs. Why? Because PPPFA said that if your FTEs went down because of a government directive, whether it was Health and Human Services directive or OSHA or CDC, Center for Disease Control, any of these government bodies, if they issued some directive regarding COVID that caused your business to get reduced, not closed, but even slowed down, or even just some of your back office functions, and therefore your FTEs went down, any effect like that, you can disregard FTE reductions. That was the great thing about the Flexibility Act. It basically ruled out having to count FTE reductions for the majority of employers. Your loan disbursement date is, of course, the day that you receive your funds from SBA. The payroll cost 75% requirement, again, during the Flexibility Act, was actually lowered to a 60% requirement, meaning your forgiveness amount can't be more than your payroll cost divided by 0.60, additional flexibility. You need to know what your payroll schedule is, meaning what your regular frequency is. You need to know what your salary and hourly wage look-back period was. That was January 1 through March 31. If the wages you paid went down, then you will again have forgiveness reduction. But again, most people who got PPP loans, from our experience, did keep their employee salaries going. Or if they didn't, at least during the first 8 weeks, PPPFA said you can actually take a 24-week period. And usually by that time, people had their employee salaries come back up. So usually people won't be affected by this either. And of course, all of this must be certified by the employer, by you on the form. Now, if somebody didn't have any FTE reductions, or if they had them, but they had excuses, they had exemptions, or they had, it was due to COVID government laws. And if somebody didn't have any salary reductions, then they can file the 3508EZ. And that'll be most employers. So what we're going to do now is take a quick look at the EZ form. The EZ form is all of one page. There's a second page full of certifications, but in terms of numbers, it's all one page. You put down your basic loan information at the top, and we'll go through that in a little more detail when we get to the long form. And then you just get to your payroll forgiveness amount calculations. You put down your payroll costs. Okay, your payroll costs are during your chosen period, whether it's 8 weeks or 24 weeks. By the way, if you got your loan after the PPPFA was passed on June 5th, you can only use 24 weeks. If you got your loan before PPPFA, then you can use either 8 weeks or 24 weeks. Then you have a choice. So whatever that covered period was, 8 weeks or 24 weeks, you're putting down payroll costs, meaning what you actually paid your employees. Note that you can, if you're using 8 weeks, you can only count the 8-week equivalent of $100,000 a year, which is $15,385 per employee. So if you paid an employee more than $15,385 during the 8 weeks, you have to cap it at $15,385. And similarly, if you're using a 24-week period, you have to use the 24-week equivalent of $100,000 a year as the cap. Then you put down any other qualifying expenses you may have had, whether it's mortgage, rent, or utilities, add them up together. And then basically that's your forgiveness, unless your loan amount was less. In other words, if you actually paid people more than your loan amount, they're not going to forgive more than the loan amount. That's why they're going to tell you at the bottom, enter the smaller of lines 5, 6, or 7. So again, it's the smaller of your loan amount or your qualified costs. And here's that 60% rule now. So that's a big relief to many employers. They were saying, well, what if we have, more mortgage, rent, and utilities and less payroll, and we have to still get 75%? So they made that more flexible. You take your payroll costs, you divide by 0.60, and that's the cap to your forgiveness. And whichever of those three numbers is smallest, bingo, that's it, your forgiveness amount, and you're done. You fill out all the certifications on the next page, and that's the end of the EZ form. What about the long form? The long form is 3 pages in addition to certification. So at the top, you're putting down your SBA loan number, your bank's loan number if it's different than the SBA number, the amount of your loan, and the date that you received the first payment, the first disbursement of the loan, your count of employees the day you applied from the loan, and the day that you're applying for forgiveness. Now that's just general. That's not FTEs. That's not anything that's going to be used to figure your forgiveness reduction. These are just general statistical numbers that SBA is asking for. Here's that economic injury advance amount and application number that has to be put down. That'll reduce your forgiveness. And then you have to put down what your payroll frequency is. Now, people sometimes ask me, well, what if I have, a few divisions in my company and they all have different frequencies? The answer is, as is the case with most of the questions you'll have about this form, ask your lender. What we saw with the PPP loan application was that different banks, different authorized lenders had different standards and applied, the limited guidance that was issued by SBA, they applied it according to their own interpretations. So here too, when it comes to forgiveness, we do anticipate that different lenders, different financial institutions will have different answers. So any type of question like that, you want to be directing to your lender as to what to do. And then you put down your covered period, whether it's 8 weeks or 24 weeks. And if your loan exceeded $2 million, presumably there will be less scrutiny for loans that are less than $2 million. There's talk about perhaps Congress passing some type of a blanket forgiveness for loans up to a certain amount, but that remains kind of stuck in Congress. That's not passed yet, but they're just asking here if your loan is less than $2 million. And then we have the same basic calculation, payroll costs, your mortgage, rent, utility, the same things we saw on the EZ, except here you also have a backup schedule. It's not just payroll costs like we saw on the EZ. This says payroll costs carried over from Schedule A. And that's the second page of the long form. Similarly, we have a section here for adjustments for reductions. Remember, I mentioned that some employers will have FTE reductions that will have to reduce their forgiveness, or salary reductions. Not generally most employers, but in case it exists, those lines are here, and then that then reduces the forgiveness amount, and then we do the same calculation, the modified total, or your loan amount, or the 60%, the lower of those 3 numbers, that is the amount you're applying for forgiveness. So now let's take a look at this Schedule A. This Schedule A looks really complicated. It's asking for employees who earned more than 100,000 in 2019, less than 100,000 in 2019. So a best practice, check with your payroll provider if they are giving you the reports that you need to complete your PPP Schedule A. I know Viventium is, but again, you want to check, or if you're using off-the-shelf software, you want to talk to, or if you have some type of customized package, you want to talk to your payroll vendors, to your providers, and make sure that they either have a report ready for you or they can show you where to get this information, because it gets quite detailed. Let's take a look here. First of all, they want cash compensation, not benefits, just cash compensation from Schedule A Table 1. Well, we'll take a look at that in a minute. And similarly, a little bit later, they ask for cash compensation from Schedule A Table 2. I'll give you a sneak preview. Table 1 are employees who earned $100,000 or less on an annualized rate basis in 2019. And Table 2 is people who earned $100,000 or more. And soon we'll talk about why they're asking for that distinction. They're also asking you for the average FTEs. Remember the full-time equivalent counts for employees of less than 100,000, that's line 2, and more than 100,000, line 5. And then for those employees who earned less than 100,000, they're asking if you reduce their salaries and how much you reduce them by. Notice they don't ask that for Table 2. They don't ask that for employees who earn more than 100,000. The reason is, and this is really the reason the two tables are separated, there is no penalty for reducing salaries of people who earned more than 100,000. The law was not really designed to protect their salaries, so you don't get penalized. So if you do have to reduce salaries, you may indeed want to consider reducing your higher end earners first, those who are over 100,000 in 2019, to maximize your forgiveness, to minimize your forgiveness reduction. And then it asks about the various types of benefits, non-cash compensation, whether it's employer retirement contributions, health contributions, or employer-paid state and local taxes. And finally, compensation to owners. Well, owner employees, if they work for the company, are subject to special limits. They're not just subject to that $15,385. They're also subject to limits based on their 2019 compensation. And all those numbers together add up to line 10, your total payroll costs. And then down at the bottom, they tell you, well, there's safe harbors where you don't have to count your FTEs. That was the rule I was telling you about before. If HHS or CDC or OSHA issued any rules that affected your FTE count, then you can skip over this. But assuming that none of those exceptions apply to you, here's where you calculate how your FTEs now during your loan period compared to your look-back period and reduce your forgiveness accordingly. And then finally, the last part of the long form is the Schedule A itself. And this is an employee by employee listing where you put in the employee's name, the last 4 digits of their social, that's the identifier, the cash compensation paid to them, not including benefits, their FTE counts during the loan period, and if they're under 100,000, Table 1 people, you also have to put down if they had any salary reduction. These reports are crucial that your payroll provider is able to provide for you, because you don't want to have to go through and figure this out on your own for every single employee. So this, I mean, the SBA even says in its instructions, get these reports from your employer. Again, Viventium's PPP Forgiveness Suite provides you with the information you need in order to complete your Schedule A worksheet. Down at the bottom of the Schedule A worksheet, there is a safe harbor that even assuming that you had FTE reductions and even assuming you didn't qualify for any of the exemptions or any of the, because of federal, let's say there's still another safe harbor, they call it Safe Harbor 2. And that says that if your FTE counts went down during what Congress had designated as the height of COVID, February 15th to April 26th of the year, 2020. If your FTE counts went down then, but you managed to restore them on or before December 31st, then you're home free. You don't have to count that toward reduction. So it's the bottom of the Schedule A where you figure out if you meet that safe harbor. And by the way, the same safe harbor applies to salary reductions, that if in case the reductions happened during those dates, those COVID hotspot dates that Congress had designated, and you got the counts back up by the end of the year, then you're fair, you're home free. You don't have to count salary reduction. So that's one of the best practices. That's one of the things you want to be looking for when deciding when to file your forgiveness application. Let's say you've used up all your PPP funds and you say, well, should I go ahead and file for forgiveness? The main question is, if you've had any reductions during these days, February to April 26th, have you brought those numbers back up? Because if you haven't, then it may pay to wait until you have. Once you do, then you won't have any forgiveness reduction, and you will be able to obtain, hopefully, full forgiveness. Again, you want to work with your providers to make sure that the data they give you is accurate. There's a lot of documentation that has to be attached, and that can come from your payroll provider. Those of you who are with Viventium can get that reporting and the documentation needed in our PPP Forgiveness Suite. I want to invite you to visit viventium.com and especially our COVID-19 solutions page for additional information about COVID-19 and the relief available to employers, including PPP forgiveness. Thank you all very much for your time today, and have a wonderful day.